Some members of Congress are pushing back against President Trump's decision to cut health care subsidies. A bipartisan fix with an uncertain future is the work of Republican Senator Lamar Alexander of Tennessee and Democratic Senator Patty Murray of Washington State. Their proposal restores the subsidy payments canceled by the president for at least the next 2 years. Those subsidies help pay for individual policies based on income. The deal includes money to promote the health care exchanges, which open on November 1st. In return for those two items, the Democrats agreed to expand eligibility for cheaper, catastrophic insurance, and they agreed to make it easier for states to opt out of some of the Obamacare regulations. Still in place, protections for people with pre-existing conditions and coverage for mandatory services. Julie Mix McPeak is Tennessee's insurance commissioner and president-elect of the National Association of Insurance Commissioners, and she joins us from Nashville, Tennessee today. Nice to talk to you. Thanks for being with us. There was a letter that the insurance commissioners wrote to the congressional committee chairs, and they said, basically in a nutshell, that they're concerned that irreparable harm could be done to populations. What specifically are you concerned about?
Our biggest concern is further segmentation of the risk in the market, and that the healthier consumers will still move towards the more cost-efficient association health plans, leaving the sickest behind for the exchanges, which have already suffered some pretty adverse claims experience and then, of course, premium increases as a result.
So the sicker people stick with the exchanges. That, of course, then makes the exchanges non-viable.
That's exactly right. That's our largest concern.
Open enrollment begins around the corner on November 1st. As you know, funding was taken away from advertising. Are you concerned about what's going to happen when people actually log on?
I'm significantly concerned about consumer awareness of the changing market conditions on all exchange products nationally. You know, we've seen a lot of carriers withdraw from the market, so consumers are going to have very limited choices for plans and benefit coverages. And so we're trying to reach out to consumers and let them know that it is critical that they look at their benefit options, and particularly provider networks and drug formularies, to make sure that their current levels of coverage remain to be in place with the limited options on the exchanges.
The CBO predicts that it'll be middle-class people, those specifically who are using the silver plan, who will be most affected. There's a health insurance analyst who says somebody who's making $48,000 a year as a single individual or $98,000 a year as a family of four is going to pay the full amount of an increase in premiums. Is the middle class going to be hardest hit by this change?
That's exactly right. The middle class that is eligible for any kind of premium subsidy or tax credit to afford insurance, they're going to be the ones that are eligible for those reductions in co-payments and co-insurance amounts. And if that funding is cut off, the premiums must be increased to cover those benefits that still are required to be paid under the ACA. And so they could see, those consumers could see rate increases of 15 to 20% based on that lack of funding.
If the bipartisan plan that we discussed went forward, basically what it would do would be to renew those subsidies for just 2 years, which to me sounds like a bit of a let's just deal with this problem in 700 and something odd days and not right at this moment. Is that basically what it would be doing?
Well, not only that, it really does put the states in a difficult position, because under CMS guidelines, we have already approved rates for 2018, and the clear majority of states included premium increases for the CSRs not being funded. So it does just postpone the debate for 2 years. And that regulatory uncertainty is so difficult for our insurers when they're making participation decisions, not knowing whether CSRs are going to be funded past October, or in the case of the legislation for 2 years. And it really is concerning for me and my colleagues to know that insurers are trying to decide whether to participate in markets when the rules are remaining pretty unclear.
Julie Mix McPeak, thank you so much for your time today. We really appreciate it.
It's a pleasure to be with you. Thank you for having me.
You bet.